Yeah, so this is something which actually has been quite well established in economic theory, going back to the 80s and behavioral economics, that when we get a demand surge, as we've been seeing, as I was saying, this extraordinary level of demand, um, if companies raise prices, that is seen as unfair by the consumer. Now, what that means is if you're a company that's got brand value, or if you're a company that's looking for repeat business, you don't want your customers viewing your price increases as unfair. Because that's going to mean that they're going to start looking to take their business elsewhere, and you're going to damage your long-term profitability. And so with companies that have got brand value or repeat custom, they are not tending to raise prices. What they're doing is delaying deliveries. It's going to take 6 weeks to get that to you, that kind of thing. On the other hand, if you're doing a one-off sale or you're selling a very commoditized product, then you don't care whether the customer doesn't like you or not. You're going to try and get as much money out of the customer as possible. I mean, think about it. If I'm selling you a 2001 Honda Civic car, I never want to see you again once we've done the transaction. So I'm going to try and get as much money out of you as possible and raise prices. So that's the split that we're seeing in the face of this demand surge. And it's why we're getting certain goods where you're seeing these extraordinary sort of 45, 50% price increases, and other areas of the economy where price increases are perfectly normal, but we're getting these longer and longer delivery times.
Paul, this huge surge in demand has also come through into markets as well, and I'm sure you get asked on a regular basis, are markets in bubble territory? Have people just gone out and bought stocks in the same way they've gone out and bought that Honda Civic you're still trying to sell, et cetera, et cetera? Are markets in a dangerous position here, given everything you've just said?
I think we are in a situation where valuations are clearly high, but we are still seeing solid earnings growth coming through. The global economy is performing very well at the moment. As I was saying, record amounts of manufacturing, trade is accelerating very quickly. So we're seeing solid earnings growth. So what that gives me is a situation where I think if valuations were to move even higher, that would be quite worrying, because I don't think that that's particularly justified. But if we are supporting equity markets on the back of stronger earnings growth related to economic activity, that's fine. That's going to be a solid performance, I think.